you get real dislocation when there's forced selling out there, when people are getting redemptions or funds are being shut down or investors are leaving in droves. I think there's just too much money at the moment looking for a pullback for us to see, unless something dramatic happens, for us to see any dramatic movements in the market. So it was good to see a bit of a pullback. I think it's healthy, and I think there's a lot of stocks out there now trading at much more sensible valuations than they were 6 months ago. So the market hasn't pulled back a lot, but you've got plenty of those high growth stocks that have gone from 25 multiples to 15, and that's much more appropriate in my view, and better for people trying to put portfolios together.
Question on interest rates. The jobless figures came out. There were, there's a few question marks around the data, how they collected the data this time round, but the overall trend in unemployment's not great. Is the RBA going to have their hand forced on rates, do you think?
Yeah, we tweeted the graph the other day. I mean, you can make all sorts of or have quips with any one particular month's data, but the trend is unequivocally up in the unemployment number from 4% a few years ago to 6.5% now. Look, I'm very confident, and I don't usually say this about macro stuff, that interest rates are going lower over the next 4 or 5 years in Australia, and I wouldn't be surprised to see them much lower than they are today. So I think that close to that zero bound where we've seen a lot of the rest of the Western world go is not out of the question in Australia. And the reason I say that is we just have this massive capex cliff coming in the mining space, and I don't see how the economy is just going to dance around that without it having a significant impact. A lot of that money is still being spent today, and in 2016 it's not going to be spent. And we have a very leveraged household sector still in the country. So I think as unemployment starts to go up, the RBA is going to have no choice but to cut interest rates.
And how much of an impact do low or zero or low rates in offshore jurisdictions, states in Europe have on the RBA's decision?
Look, they're very, very clear that they would like to see the Aussie dollar lower, and I'm sure a perfect world for them is that interest rates go up in Europe and up in the US and stay where they are here, which puts downward pressure on the Australian dollar. I just don't see a lot of evidence of that happening quick enough for the RBA to deal with the problems that are coming domestically. So they want interest rates up, but there's just not. I think up in the US is interest rates. They'd love to get them to 1 or 1.5%, but I just don't think it's going to move the long end of the curve that much at all, because most of that is already priced in. So I don't think it's going to come to the rescue of the Australian economy.